The Investment Secrets of Warren Buffett. Let's go to the video. 1. Look at quality businesses, not just the stocks. Warren Buffett said, "When I buy a stock, I think of it in terms of buying a whole company, just as if I were buying a store down the street." Most investors don't analyze the businesses they invest in. They simply follow the symbols or brands of successful corporate houses. If you are buying a shop, you will analyze about the products dealt by the shop, overall sales, consistency of sales, competition for the shop, competition strength of the shop, how the shop will manage the change in customer trends, and so on. We need to apply a similar logic before choosing a stock. Don't think that you are only buying a few shares of that company. Will you buy the whole company if you had enough money? 2. Are you willing to own a stock for 10 years? If no, then don't own it even for 10 minutes. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. In the short run, the market is like a voting machine, tallying up which firms are popular and unpopular. But in the long run, the market is like a weighing machine, assessing the substance of a company. Looking at the short-term opportunities in the stock market will not be a long-term successful strategy. If you don't feel comfortable owning something for 10 years, then don't own it even for 10 minutes. 3. Check thousands of stocks and look for very high bargains. Avoid investing based on the stock tips or recommendation. Do your own research. Analyze thousands of stocks before choosing the right stock to invest. Once you have chosen a right stock, wait till the share is available at a very high bargain price. Buying a right stock at the right price is the key to investment success. Investors have the luxury of waiting for the fat pitch. It is really difficult for an individual investor to analyze thousands of stocks and finding out the right time to buy a stock. If this is the case, you can outsource this portfolio management to a professional financial planner or wealth manager. But you need to be careful in choosing a professional who is capable and at the same time customer-centric. 4. Human beings always have a natural tendency to follow the crowd, but when it comes to share market investing, following the crowd can more often result in ending up with losses. Why do you copy the mediocrity of the masses when you can replicate the success of one of the world's greatest investors? 5. Scrutinize how well management is using the resources. Check how efficiently the management is using its resources like money, manpower and material. This management efficiency will in turn reflect in return on equity and return on capital. 6. Always stay away from the hot stocks. The hot stocks are those stocks which have some attention-catching activities such as severe volatility in share prices, high trading volume, or when the stock is in news. Stay away from these hot stocks. Warren Buffett once said, "Most people get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what is popular and do well." 7. How much money you will make. Before investing in a stock, calculate how much money you will make in this investment. Of course, you need to make a few assumptions to do this calculation. But do calculate. Most often investors tend to ask the share is undervalued or overvalued. Identifying the intrinsic value of the stock is difficult, and the various models available to calculate the intrinsic value are faulty. Warren Buffett wrote in a report, "Unless we see a very high probability of at least 10% pre-tax returns, we will sit on the sidelines. Get rid of the weeds and water the flowers, not the other way around." People have this tendency of loss aversion. That is, when the share price has fallen down by 50%, they choose to wait. They convince themselves and others by saying it will definitely come back. Also, people will rush to book profit when their shares go up just by 10%. In effect, investors tend to keep the loss-making shares with themselves and they offload their profitable shares. Actually, it needs to be the other way around. These 7 secrets properly applied in the stock market would be your roadmap to riches. I hope this video is helpful. Thanks for watching this video.